All right, everyone. Hello. Thank you so much for your patience. Having minor technical difficulties this afternoon. It's not morning anymore, but nonetheless, we are here live with you on Facebook and soon to be reposted on YouTube and anywhere and everywhere else we can to share today's message. So I am Amanda Sanchez, and I am the founder of Queens Redeemed, where we just really focus on empowering women, their businesses, and their finances. And this month is Financial Literacy Awareness Month. And so, what I've done is brought you the finance edition. And each week, we've been interviewing women in different sectors of the financial industry to just bring a little bit more of financial literacy to our community, right? Because we don't always know about money. Money is a game. If you don't know the rules, you cannot play to win. And so today we have a credit repair specialist. She's an expert in the industry. She has been in the industry for about 5 years now, and she is in business with her amazing husband. And they have multiple businesses where they're just having the opportunity to bless other people, bless the community, and really build each other up. And so I've known her through actually through church, and we've been in connection since. She's helped me, she's helped a best friend of mine, and a lot of the members of our church. And so, what I would love to do is bring her on, and we are going to talk about credit. So, a lot of us know that credit is more than just three numbers, and there's a lot that goes into it, a lot that affects it. And so we're going to dig in. If you guys have questions, please do comment below. If you do find this on YouTube, like, share, subscribe, and all that fun jazz. So I'm going to bring to you today Miss Johanna Diaz, the CEO and the president of Credit RX. Johanna, are you there, my dear?
I am.
Awesome. And now I'm trying to make sure how I see you. All right, perfect. Now I get to see you there. So, how are you doing today?
I'm doing great. It's been a busy morning, actually. So I've been busy a little bit.
I know you had gone, you had your own 15-minute kind of snap on credit cards and how to be able to pay those down. And I know you have two more coming up this week about loans and then mortgages, right? As
Yes.
well. Awesome. So we gotta make sure we plug into those as well, because I know there's only so much information that we can cover today.
Very true. I'm doing it from Wednesday through Friday, and I'm picking a subject that people want to hear about. So Wednesday today was 15 minutes for credit cards. Tomorrow will be card loans, and then Friday will be mortgages, and it's all about how to pay them off faster. So
Nice. Oh,
yeah.
so we're definitely going to share that information. We'll put it in the comments below so people can tag and follow that as well. But I want to say thank you so much for taking time out, because I know you have been growing and expanding so rapidly. So thank you for carving the time out to speak with our ladies today. And if we can just start with, tell us a little bit about yourself and how you got into this industry.
Well, it's a funny story, but it's a story that might encourage some people. I know that a lot of the people that I've seen us think that because we work in finances, our financials are perfect, or that we're never gonna have problems because we know it all. And in all honesty, Credit RX started because we had a situation in our own credit life.
Mhm.
And so when my husband and I wanted to purchase a property, we couldn't do it because of our credit. And we started working on it, and we tried our best to really understand it, and get the tools to be able to fix it up. We made a lot of mistakes, which is a lot what a lot of consumers do. Like, they start paying off their collections, and so on and so forth, and you start making mistakes, and then all of a sudden you run the credit again, and it's worse than it was before. um so so then, I helped my husband. We got the credit where it needed to be. We purchased the property. And that's when like that little light bulb went off, and I was like, I think I got something under my sleeve. And so that's how it started actually. And this was about, well, it started January 15th of 2015.
Okay.
Yeah. So I mean, it was out of a personal situation, that when you want to get better, you kind of reinvent yourself, and you come up with ideas, and you're like, oh, dang, I think I can do this for a living, and that's how it
Right.
started. Hmm.
That's awesome. Now, I know you've been growing and expanding, and it's been such a pleasure to be able to see how well you've taken off. And now you have your own specialized call center reps to just really help because there's been such an influx in your business. So it's been amazing to hear. So, share with us a little bit. So, I want us to go through the newest person who hears the buzzwords but doesn't understand it to the person who, like you said, thinks they may know finance but really kind of get some things clear. So starting in, you know, what is what is a credit score? Really, what is a credit score? What makes that up?
That's good. That's a very good question, and it's good because it's like baby steps. In order for you to be able to understand a bigger picture, you always want to start from understanding the little baby steps like towards credit, right? So obviously we have three agencies. Everybody knows that, right? Experian, TransUnion, and Equifax, right? And all of those three agencies are going to be reporting things very differently, and which is the reason why we have different credit scores. When we pull up our credit scores, they have different algorithms, they have different ways to report things on the credit report. And so the most important thing to know about what credit score is, or how it gets handled, or what's the most important about it important
Hmm.
thing about it, is knowing that the lenders are always going to take into consideration your mid score. All right. And what a mid score is, we have the three, right? So they're not looking at the one that's the highest, they're not looking at the one that's the lowest. They're looking at the one that's in between the highest and the lowest. Um, I've seen a situation where a person in one credit bureau, they had a 700, and another credit bureau, they had a 600, and in another credit bureau, they had a 500. That's how
Mm.
different our credit
Wow.
scores can be. And that's how different the credit bureau companies, reporting agencies report. And
Hmm.
so if you have someone that's a 700, 600, and 500, then we're looking at that mid score being a 600, right? Because it's not the highest, it's not the lowest. So that's where does it come from? Creditors send the information to the credit bureaus, and through algorithms and different ways to report, they come up with a credit score.
Hmm. Okay. So I know when I started in college, once you turn 17, they start mailing you credit cards in the mail. And my mom always said, don't do it, don't touch it. So rip it up. We would rip it up. But when I went to college, that's when you're free to do what you want. Right. And so my very first credit card, I think, was either JC Penney, Old Navy, or Walmart. I had all of them in college because I was like, I needed to eat, so I ate at Walmart when school was closed, and so I needed J.C. Penney because I was in a pageant, so I needed to buy a dress. And Old Navy was just I just wanted clothes. So, but I did well with managing them. But how would you say? How do you build credit? Was that the smart way to do it, or what's a good way to start building your credit if you have none?
So there, I'm gonna give you my like a credit consultant's perspective for an answer, because there could be many different ways to build credit. You can get yourself added as an authorized user of someone's credit card. You can apply for a secure credit card through different companies, even your own financial institution. And so you could do many things that will get you to build a credit in a healthy way. However, the most important thing for you to do is not just build the credit, but understanding that when you build it, how do you maintain it, right?
Yes.
How do how do you navigate through, like, how much should I owe? How much should I pay? How can I pay off my credit cards? How can, so those things, as a credit consultant's perspective, we're looking more into the educating the client, as opposed to
Mm-hmm.
just, let's just build your credit, because anyone can get a credit card, anyone can get added to a credit card, anyone can build a credit. Nowadays you have a lot of credit card companies that are actually giving secure credit cards to everybody, right? So the point is not how to build it, it's more how to, how to do it, how to manage it after it's already been built. um,
Okay.
for us, we do have credit establishment programs that do not run your credit score or your credit report. So in that case, it's amazing, because it's not going to drop your credit score before it goes up. It's just
Right.
an automatic move, increase, instead of like taking
Mm.
a decrease and then increase later.
Yeah.
So, but not everyone needs that, right? Not everyone needs to build it. Maybe they just need to pay them off, or pay them down. So it all
Mhm.
depends on the situation that the client, is in right now.
Okay. And so I know you saying, it's about understanding the education behind it. So what plays the biggest role in keeping it healthy? Because I've heard, you shouldn't go over the 30%. And there's some people who say you should pay off the credit card every month. Use a little bit, pay it off. Some people are like, no, you want to leave a balance. So what's a good way to keep that healthy?
So, it's not one answer for everybody, right? Because all of us have a different credit life, right? So some of us might have a lot of installment loans. Some of us might just have revolving credit, which are credit cards. And then, for the sake of people watching us and understanding what an installment loan and a revolving credit is, an installment loan is just a loan, right? A mortgage, a car loan, a student loan, a personal loan, something that never changes, that always has the same fixed payment, and it's like
Okay.
on a term, right? Installment loans. And then we have the revolving, which are like our plastic, right? A credit card,
Mm.
that you have with a company, charge cards that you have with stores. So depending on what the credit life of a person is how you would answer that question.
Okay.
Because if you have a 700 or a 730 or a 740, or you're doing really well, you might not have to leave a balance behind to revolve, to have that revolving effect.
Mm.
But if you have a 500, 580, and you have one credit card and that's the only thing that you have, and you want to see a better credit score, then you might want to leave a balance behind. Bottom line, if you're going to leave a balance behind, always leave a small balance behind. It doesn't mean that you have to, only pay the minimum and leave this huge balance behind. That doesn't mean you have to do that. You could leave a couple dollars, two, three,
Okay.
$5, but that's for someone who really needs a boost on their credit score.
Mm.
It all
Okay.
depends on the life of the credit of the
Yeah.
person.
Okay. So it's not a one size fits all. It's
Mm-mm.
true. That's good to know because I was not aware of that. I thought it was like I know it's complicated because like you said, like there's the different algorithms, but even so, it's a little different from a 700 and up person from a lower person. Okay. Good to know. Thank you. See, this is helping me too. So, well, what are some common mistakes that people make that lead them to dropping their score and needing credit repair?
Um, so the most common one might be collections. Not
Mm.
understanding how collections affect your credit score, and not understanding that most of the time, if you pay them off, you actually get a drop on your credit score instead of getting an increase.
Oh.
And the reason why is because when you have a collection, um, and you pay it, it's like, okay, I didn't want to pay it before, but now I do. So I'm just gonna go ahead and and pay it. And so you're assuming the debt. So that kind of gives you like a drop on your credit score.
Hmm.
So that's one of the biggest mistakes that I can share with you. When people are looking at their credit reports, they want to be able to understand that whatever they do is going to affect positively or negatively, right? So understand that if you pay off your collections, if you like right now, forbearance with the mortgages, right? A lot of
Hmm.
people are doing forbearance in the mortgage and they don't understand that this is going to actually have a negative impact on your credit report.
Um,
And the reason why is because of no data. So they suppress the payment. So they give you a little bit of a chance to, to not pay, but it's suppressing
mhm.
the payment. So you're not showing any history on the credit report. Oh,
Wow.
another big mistake too, thinking that if I pay off something, my
Mhm.
credit will be better. So a lot
Mm.
of people say, well, I'm almost done with my car loan and that's going to help me, right? I'm almost about to finish my payments on my car loan, which is something I'm going to talk about tomorrow for the 15 minutes of best strategies. But a lot of people think, well, I'm going to pay off my car loan, so it's going to be better. And it actually is the opposite because it no longer has history on their credit report.
Oh,
Yeah, so it's one of those things where people think that they're doing something good, but they
yeah.
actually aren't.
That's man. Because I'm like, we just got a car loan. So now I'm like, huh. Yeah, because we're like, how fast can we pay this off? What's the quickest thing? But I know that, that's been helping us, every little bit helps. And it's been nice, to just know even just more. This is a lot of information already. We didn't even get into the juicy stuff because that was gonna be one of my questions about collections because I've read, it says that it'll fall off after 7 years after it's been. Let me read it here. That after it's been added to your report, so your legal responsibility is calculated differently. But if you choose to leave it, don't interact with them, then it can reset the legal clock. So it sounds like it's just confusing or crazy. Or I've also heard that collections, like I've watched so many YouTube videos, which can lead you in so many directions, right? But there's some people that say collections is they purchased it, your bill. Let's say you had a $1,500 medical bill, right? So the hospital sold it to a collections company for a smaller amount because they just want to kind of get rid of it. And now this collection company got this, they pay me, let's say something crazy like $800 for $1,500. So their profit is bigger, but they want you to pay them the 1,500. So is that true? And then what do you do in that situation? Because if I didn't pay you 1,500 and I owe it to a hospital, I'm not giving you extra money. I didn't make this contract with you. I'm just saying. I don't
So
know, something
no,
crazy like that.
you actually are right about that. So we have original creditors and then we have debt buyers, right? And
Mm.
so the original creditors are obviously the people that are giving you providing a service to you, right? Providing a product or a service to you. And then when you default on the payments, they can either keep their debt and collect it from you, or they can just say, I don't have time for that. I'm just going to go ahead and send it to a debt buyer and then let them deal with the situation. Normally and legally, right? Debt buyers should not add on any other charges or fees on top of what you already owe. And
Okay.
this is something that people don't understand, right? And people
Mm.
don't know. And so like for us, we have CreditRx has a program, a settlement program, and also a pay to delete program. And we have direct contact now with like this big debt buyers, right? Portfolio Recovery, Cavalry Portfolio, um, Midland Funding. Merchant credit, which is one of the biggest debt buyers for medical collections. And so we as a
Mm,
company, we have a direct contact with these people, and we know like how to, the loopholes, or no, you're telling me something that is not accurate. You're not, you're violating the laws and the regulations, and we already have like this whole thing, right? But most importantly, and I'm actually pulling up a thing as I speak to you on my computer, because it is very important to understand what the state by state list of like the statutes of limitation. Because
okay.
now the statute of limitation does not mean that it falls off of your credit report and you no longer owe it, right? Statute of limitation
Mm,
is just says, it just covers the client, or tells a creditor you can no longer go against that client for the money. If they want to pay you, they can pay you, but you no longer can charge the client the money. And for just for the sake of the example, for Illinois, for the state of Illinois, it's one of the longest statutes of limitation. We have
wow.
other countries, not countries, states. We have like Delaware is like 3 years here, 3 years there. Very short periods of time for oral, written, promissory notes, and things like that. And there's different, depending on how the contract was, is how you would think, what the state, the statute of limitation is. Uh,
Right.
but for Illinois, we can go up to 10 years.
Oh my gosh.
And so how do you talk to these companies to still be able to give you that break to do a settlement, and or maybe delete it off of your credit report, and
Yeah.
still in the, you still have not gone through the statute of limitation yet. So you have to understand,
Mm,
original creditor, debt buyers, how do they work that?
okay. And so, wow, that is, man, I'm so mind blown. Oh man. Okay. That's good. That is good. So then I know something else, that there's collections, there's credit cards that are considered closed, but then there's also, I heard the term charge off.
Mhm.
So, and I know that those can impact. So what exactly is a charge off, and how does that really impact as well?
So that is a great question, because a lot of people think that, oh, it's charged off, so I don't owe it anymore. And it's probably charged off and written off the creditor's books, but it doesn't mean that it goes away from your credit or you no longer owe it. You know what I'm saying?
Mhm.
So I'll explain to you. So let's say I have a credit card with, a financial institution, and I owe them $2,000, right? And I lost my job and I can't make a payment anymore. And so I go, the month of April, May, June, and I'm not paying them. Usually about 90 to 120 days late, the company is gonna be like, you know what, I'm just gonna close it out and make it a charge off, right? And so a charge off means it's closed out with a negative balance. That's what it means. That's a charge off. And so what happens is that now it's going to report on the credit report as a charge off. Now, what a lot of people do, and this is like a very good tip, a freebie today.
Okay.
What a lot of people do is they call the companies and they say, "Hey, Chase, or whatever, I owe you $2,000. Can you put me in a payment plan?" Right? Because they think that, okay, well, I'm, making $100 a month, $100 payment a month, I should be fine. Um, but in reality, because it's a charge off, it's going to report negatively on your credit report
Mhm.
until the day you pay it off. So if you have a monthly
Oh.
payment of $100 and you owe 2,000, do the math, right? That's 20 months, right? It's going to be 20 months
Mm.
of reporting negatively until that 20th month. Then it reports positively, because then you no longer owe it. And so if there's one thing that
Wow.
you guys will learn today, is do not set up payment plans for charge of accounts.
Ha.
Yes, that's a freebie today, Amanda.
Man. Okay. So don't set up payment plans. So basically, we just all need to call you and book on your calendar because this is a lot of intricate information. I always say you can learn the hard way or you can learn a little less of a hard way because it's just like I'm a big advocate on the fact that God has given us different gifts, different talents. We're not meant to all be the one person to do anything and everything because one, our minds are meant to be creative, you know. So if you are not in the space of your creativity where God has created you to flourish in the gifts that He's given you, and you just start taking on something new like this, sure, I can sit here all day and try to learn credit myself. That is not my area. My brain is already like, oh my gosh. So to try to figure this out or to add it, no, I can't do that. That is too much. That's why I got you, girl.
Yeah.
That's why I got you. So then let's see, because we touched on some of this. I love this. Girl, I'm not going to let you go. I'm going to keep you all day. Just kidding. Just kidding. So let's see. Ah, let me see. I wrote here, what are the options to dispute or not pay in full of the amount? So that we talked about that. So with like collections or with the charge offs, things like that, is it best to pay it off? Is it best to try to maybe do a portion or there it is. I found my right question. So is it something that you should get removed, paid in full, settled? What are some of the better option? I know for that it's probably tailor made to, it's probably depending on the relationship that the client had with the service provider, but what have you found may work best?
So you have to know what account we're talking about, right? So if it's a collection, what should we do with that? If it's a charge of account, what should we do with that? Should I settle? Should I make monthly payments? So my thing is the first thing is do not make monthly payments for anything
Okay.
that is already shut down, closed, and charged off, right?
Okay.
Even collections. When you have an account like that, you need to the best way to approach it is to do a settlement.
Okay.
Okay. And a lot of people think that when you settle something, meaning you pay less than the full amount, that it's actually going to show on your credit report worse than if you pay the whole thing off.
Hmm.
And I wouldn't say that. um Whether you paid it in full or you paid it for less than the full amount, you paid it. You
Right.
came to an agreement with the company, and you paid it. Whatever, if you have a zero balance at the end of the agreement, that means that you paid it, right? So
Hmm.
I will never, if I have something that is charged off or something negative on my credit report, I will never pay it in full. And that's me personally, because companies are willing to do a settlement with you, especially if you are in a hardship situation, right? So, like if you
Hmm.
lost your job or whatever, you're just barely getting back on your feet, then I would probably just think about settling the accounts. And it looks okay in your credit. I mean, it's still going to look like you had a charge off and that you paid it for less than the full amount, but you called them and you got in an agreement with them and you are wanting to get things taken care of. So I would probably go more towards settling something than paying it in full.
Okay. Okay. And then I know, so I had a coworker who had a timeshare that was passed on to them from family. And so all the kids are like, how can we get out of this thing? And they feel bad because the parents are still around. So they're like, okay, what can I do? How do I get out of this? I've had coworkers that say, you know, watch out for new honeymooners, because you'll get locked into a timeshare. And so I know that I think we might have talked about that before, but how do timeshares affect a credit report, whether it's negatively and positively? You're shaking your head no. Whoop.
you know This is one of the 15 minutes of best strategies that I will be talking about next week, and I
Okay.
cannot wait. So timeshares are like a whole different animal.
Mm,
It really is, and it's really sad to see people having timeshares and no property. So they don't have
mm,
a house, they don't own a property, but they own a timeshare. And it's really sad because people really lie to consumers. Companies like timeshare companies really lie and very strategically get that consumer to say yes. About two
mhm.
years ago, we came up with a program for timeshare cancellations. And the
Wow.
reason why we did timeshare cancellations is because when you have a timeshare in your credit report and you no longer pay that timeshare and it becomes a charge off, or maybe it becomes a short sale, or maybe even a foreclosure, it actually reports on the credit report and on your public filings as if you literally had a foreclosure. Like if you had
Oh,
a home
wow.
and you foreclosed on that home. It's terrible,
Oh my gosh.
terrible.
What?
It it is. I'm gonna. You have to jump on the best strategy.
Yeah. I'm
It
gonna spread that around like the
the
corona.
the the timeshares are so devastating for credit. We had a situation from one of our lenders from Guarantee Rate. He sent me
Mhm,
over a client, and this client went to Mexico, and of course, he was involved
mhm.
in this whole timeshare presentation, whatever. He signed up for the timeshare. He had 5 days to cancel it. He canceled it on the third day, kept his copies, everything. It was still showing up on the credit report. It was still showing up as a foreclosure under public filings.
Oh
So
my
we
goodness.
had to, obviously we know how to
Yeah.
do it. And so we were able to get that completely off of his public filings and also his credit report. And he closed on his condo about maybe a month ago. But it
Wow.
was ridiculous how timeshares are now, now and always have always been a terrible situation for people's credits.
Wow. Dang, that's crazy. Because I know that they're rampant everywhere. Any nice vacation destination, you are bound to be hooked into something. They will give you in Mexico. They'll probably give you a free tequila bottle or something. Like they're everywhere. Tequila's everywhere in Mexico. That's crazy. Oh my gosh. Okay, so this is something that I've heard was interesting before. Is there a difference between credit repair and credit restoration?
I think it's the same.
You think
I
it's the
think it's
same?
just I
Okay.
think it's just credit restoration is probably like a fancier way to say it.
Ah, okay.
I think that when you're restoring your credit, you're doing a bunch of different things. When you think about credit repair, many companies out there are only doing investigation to the credit bureaus.
Hmm.
Um, which is why we always call ourselves an all around credit consulting company instead of just credit repair. Because credit repair is just me sending rounds of investigation to see what falls off of my credit report. But when you say I'm an
Mm.
all around credit consulting company, that means I can take
Oh,
you when you have no credit, or when you have
okay.
just one credit card, or when you are in the 680s and you want to be in the 700s, or when you have flawless credit, but unfortunately you had, a repo, just one little item, right? That does not require you to be on a monthly payment for credit repair, credit, removals, or whatever the case may be.
Mhm.
So that's the reason why we call ourselves in Credit RX, we call ourselves an all around credit consulting company, because we can do it all. We, you know,
Yeah.
we work with judgments. If someone has a judgment and they want to release it, if they have a tax lien situation, we can work with that. If someone has a
Mm,
wage garnishment, if someone has collections with student loans, like, so we're more than just sending rounds of investigation to the credit bureaus to remove things.
yeah.
So
Okay. That's that is great to know.
mhm,
Like you said, it's not just throwing some letters, around to dispute something, but it's truly repairing from the beginning to the end. Because I know you've helped people, fix their credit to get into their homes. I would
mhm.
say that's probably one of the biggest benefits, or what are some of the benefits to really having a healthy score and repairing your credit?
I think that just like everything in your finances, I think that anything and everything that has to do with your financial life, it all comes down to what your credit, how your credit looks like and what your credit score is. You know, um, from the smallest thing on a credit report, which is a credit card, to like all the way to a mortgage, right? Like everything is going to be it's going to be driven by what your credit score is, your interest rates, right? Like what's,
Mhm.
I have a client actually that he's in a 690 or something like that, and he wants to be a 720 so he can get 0% on his car loan. So our clients come from all types of walks of life, and they have different goals. Maybe they already have a mortgage and they just want to refinance it. Maybe they already have a mortgage but they want to purchase a car and they don't want to pay the entire car, or just buy it in cash. They want to finance maybe half of it or whatever the case may be. Or maybe they want to get a line of credit because they want to fix their house, or they want to maybe do a second floor. I don't know, like there's so many things that people want to do in their finance life
Mhm.
or financial life. And it all comes down to how your credit is and what your credit score is.
Yeah.
Mhm.
That's I love that. Thank you. Thank you so much. And so I guess my one of my last questions would be, what are some steps that people can take today to start getting on, either, like, for instance, my son is 18 years old, right? So he doesn't have any credit yet. So what are some, maybe some healthy steps for a new credit person and then someone really restoring? What can we do?
I think that for those two scenarios, I think the best thing that we can do as credit consultants is tell the client to really understand their credit report itself, right? So, like a lot of people, when was the last time you pulled your credit, right? So,
Mhm.
maybe we can, whoever wants to get a free copy of their credit report, I can send them, if they send us the email address. It could be through a messenger or whatever the case may be. They can put their email address in there and we can send the instructions to pull the credit. But the first
Okay.
step to that, to know that, is to know how your
Mhm.
credit report looks like, to understand that
Mhm.
there are different areas of your credit report. You have your personal information, you have your account information, you have your public filings, you have your collections, you have your inquiries, right? So, like, there are different areas of your credit report that you need to understand, and you need to understand what each area, if there's any
Mhm.
mistakes on each of those areas, how it affects your credit score, right? Or
Mm.
how it affects your credit report. And then for the ones that don't have any credit, then obviously it's just to build it, right? So how do you build it? How do you educate yourself to knowing, like, once I have it built, and I have a couple credit cards, how do I have to pay them, off? Or how does it, how am I supposed to, like, spend my money? Or do I max it out? Do I pay a little more than the minimum payment? Do I pay and leave a balance? So just getting yourself educated to, like, what exactly you have to do with your credit. And then of course, for people who right now are in a place where they have bad credit, like, what do I have, what little steps can I do to, like, obviously get out of that? So first, understanding your credit report, right? That's the number one. Make sure you don't make any late payments. Late payments completely damage your credit. I mean, it makes up
Mm,
35% of your credit score. Just
wow.
past payment history makes 35% of your credit score. And remember, when you make a late payment, it dings you for 24 months.
Oh,
It stays on the
wow.
credit report for 24 months. As a matter of fact, some of the lenders, or I probably should say all mortgage lenders, when they pull credit, they can see late payments from even 5 years ago. So
Ouch.
it dings your credit, and it's
Mm,
35% of your credit score. How do you, credit card usage, right? Credit card usage is 30% of your credit score. So how do you use your credit cards? Should I use a little more than 30%, a little more than 50%, a little, it's one of those things where just keep your usage low,
okay.
preferably lower than 30%, right?
Okay.
Your length of credit history, that makes up 15% of your credit score. So your length of credit history, don't close credit cards that you have opened for like 10, 15 years. Those things are
Mm-hmm.
amazing. Like, you don't want to just let go one that you opened when you were 18, because now when you're 30 you have something better. You don't want to do that. You see, you
Mm,
want to keep the oldies.
yeah.
And
The
of
oldies but
course,
goodies.
yes, oldies but goodies. And the type of credit card, credit use, and the inquiries are big things. For your credit. You don't want to do unnecessary inquiries. If you already
Mhm.
have credit cards and you don't have to get another one, don't just apply for a credit card just because you want to get 15% off. Like,
Right.
you don't have to
Yeah.
do that. But if you find yourself in a situation where you have to, maybe you go to a medical place, and you don't have insurance, and you have to get one of those care credit cards, and it's 0%, and you have good credit. So that's a good scenario. But if you're maxed out on your cards, and you're standing at the Target line, and they're telling you you're going to save 15%, why? You don't need
Yeah.
it. You don't need it.
Yeah. I know you're big on that. You're huge on, is it a want or it is a need? Because the needs are important. If it's a want, don't do it. I know you give papaos. So
All the time, my girls always in the office, they're always like, "Oh, don't tell Joanna that you use the Cole's credit card because she's gonna go crazy." I'm like, "Did you really need that? Did you really need that to live?" It's
and
you live a simpler life, and I'm one, and you know me on a personal level, right? Because we're friends, and business partners and stuff like that. But I worked really hard to have what my husband and I have, and
yeah.
it's all been because God has been amazing, and the wisdom that comes with getting in the word, and understanding what God really wants for your financial life. It's where it comes, and you really don't want to be utilizing your funds to spend it on crap.
Hmm.
you know
Yeah.
if I don't need it, I don't want it. I live a very simple life. I have my investments, and we have a vacation rental business in
Hmm.
Puerto Rico. And I think that when you focus on getting things that will have return on investment, that's when you really live that free financial,
Yeah.
so you work hard. You don't want to spend it in crap, unnecessary crap.
I love that, and I love that you said that, because I was just gonna share that, because I've been talking about it on every interview, but it's just timely. But there's a book that I'm reading. It's just about like the 9 essential financial principles, but from a biblical perspective, especially for
Mhm.
Christian entrepreneurs. And I was just reading today, or this week, for the Bible study on debt, and really just like God gave us businesses for a reason, but also it's about putting our trust that He's going to give us the necessary resources. And in a lot of other countries, they don't have credit. It's like, this is the money I have, so this is the money that I'm going to use for this reason and for this purpose. And it's America that is so indebted and everything. But it's just like, what got me today when I was reviewing it, it's just like, also be mindful of your what kind of debt you're getting into, because also the Lord has blessed you with a business idea. He's going to provide the resources. If you're instantly, well, oh, I need to go and I need to get this debt and I need to get this credit card, I need to get this, in a way you're not trusting that the Lord is actually going to provide for you. And
I
that hit
actually,
me.
that it's true. I actually 100% believe that God has given us a business to be a blessing to others, not
Yes.
necessarily to be a blessing for ourselves, right?
Yes.
Because, like you said, when you trust in the Lord, things come to you, that He provides whatever needs you have. You never go without a plate of food, right?
Yep.
Or shelter. Clothes, things that you really need, right? But I seriously think that he gives us business ideas, and we become successful at business, but because he wants us to be a blessing to others. So how
Yes.
can we be a blessing? And when we talk about blessing, it doesn't mean that, oh, because I'm over here educating people on finances. No, it's actually a step farther. Like, people,
Hmm.
God wants us to be a blessing financially, right?
Yes.
Financially a blessing. So how can we be a financial blessing to someone if we don't have the savings or the necessary finances to take to take
Yep.
our stuff and then be able to bless someone else? So I
Yes.
truly, I'm a firm believer that that is why God puts us in a situation where we have a business, and you just to be a blessing to others, not only for how we handle ourselves, but also like monetarily.
Hmm.
Yeah.
Yeah, and that is such a great point, because my husband and I, that's one of the biggest goals and the reasons that I chose to not only just become an entrepreneur, because I think for me becoming an entrepreneur, it just really started because I wanted to learn about finances, and I didn't want to go to college and pay thousands of dollars and midterms and finals. So I was just like, I don't want to do that. So this was an alternative. And then when I saw the beauty of the business and really how I can help people with their finances, really help them build a strong financial foundation and then build up a strong home, which is really essentially what all of these parts in these interviews really have, because I don't have to build a whole house. I just
Mhm.
teach people how to build the foundation. And then I have people like you to come alongside me to help put in the walls, the windows, the lighting of a home. I don't have to do it all by myself.
Mhm.
But
Mhm.
I realize the blessing in one, showing people how to set the foundation, protect their wealth, protect their health, protect their legacy, to start a business on their own. And women, we work so darn hard to build these businesses, especially if we're momtrepreneurs and have kids. And it's just like we do all of this. And if we don't even know how this money works, stuff like this, like the corona coming and wiping out all of our savings or wiping our retirement, it's like we work too hard. We
Mhm.
work too hard to not know about money. So that's like the biggest blessing that I hope that people receive from these things is don't just sit and take the information in, because that's what we do too in this country. We just fill our brains, but now we got
Mhm.
to just implement. We got to start acting on these things. It's like, okay, like what can we do? Where do I want to be in 5 years? Where do I want to be? Shoot, where do I want to be in 6 months between Corona? Where do I want to be in 18 months? Where do I want to be in 5 years? And like really put the big plan and then break the little steps down,
Mhm.
and then actually work on the steps, because
Mhm.
we can write it down all day, but if we're not willing to do the work, if we're not willing to face the reality of where we are, because I know credit is not, sometimes if people know that they haven't been doing what they want to do and their scores are low, sometimes people don't want to face the reality. And I had a spiritual mother tell me, she said, Amanda, if you have your hands, if someone's coming and they're about to like punch you and you put your hands over your eyes, just because you put your hands up doesn't mean that they're not going to finish hitting you. That punch
Mhm.
is still coming.
Mm.
So if you want to be blind to the reality of your finances, and just because you close your eyes, you look the other way, doesn't mean it's not there. And to let it fester and grow is like weeds. It's just going to get worse and worse and worse. So it's important. I don't know where all this is coming from. This was not in my intention. This is, I'm just like so freaking passionate about it, because I'm just like, it is especially just women, we just work so hard.
Yeah.
And women,
Yep.
I feel like we lose. There was another conversation. There was a movie. I think it's called like Where Did You Go, Bernadette, or something. We were talking about in Bible study, but women, we just lose ourselves. We lose ourselves in serving everybody else and putting everybody else before us. And it's like, it's okay.
You know what is encouraging though, and now talking about like, how women are, like really trying their best to catch up, right? We're always catching up, and I feel like we're probably already ahead of the game. But um, women are so special, and they're so special in God's eyes. And I see it because, like, when I put up different things about, let's get together and let's talk about finances and let's talk about, credit cards, how do we pay them off? And you would be surprised that the majority of my participants are women. And
Mm,
it's because we want, like, we really take and I'm gonna tell you, with the Zoom meetings, we can see the girls and we can see the kids in the back, because everybody's homeschooling now. So you can see the
yeah.
kids in the back, they're muted, they're like, "Ah!" and then they get back. And it's like, if you are literally like taking the time and you have this whole world behind you going crazy, and you're still taking the time to understand and to educate yourself, you're special. You're a
Yeah.
special person. And God, has a very important, place for us, because
Yeah.
we are, we're always trying our best to get ahead, and to
Hmm.
get our families to be ahead of the game. And our husbands are so tirelessly working, and we're like planning all these little things in our finances to be
Hmm.
better. Our kids, our nephews, and whatever. So it's encouraging, actually. It's very
Yeah.
encouraging to see the girls always jump on the education pieces that I do for credit and things of that nature.
And I love that. And I thank you. I thank you so much just for everything you're doing. I thank you for allowing God to use you in a way to, one, yes, start with helping yourself, coming to that reality and just being so obedient, because I've seen how much He blesses you and your
Mm,
husband. And you're definitely a role model for
mm,
us and where we want to be able to get to. I always, have my mentors say, kind of be around those that you want to be like. You're, the average of the five people that you hang around with. And so, and also, if you're the smartest person in the room, you're in the wrong room. You don't want to be the smartest person in the room.
it's
So
very true.
I love that God has blessed me with the opportunity to develop our friendship and our sisterhood and our business relationship, because I just know together there's so many women, so many families, so many men that we'll just be able to bless, because it's all about just bringing the next person up. So I thank you so much. So share with us how we can follow you, find you, get some help from you and your team. Share a little bit. This is your plug time, girl. Plug it. Plug it.
So we have a team of seven. It's six girls and a boy.
Ah.
Finally, I make a boy work for me, and he's freaking fantastic. And so it's seven of us. We do have different departments now in the company. So we have the intake department, we have the sales department, and then we have the client service department that takes care of all the files. And we're getting better and better at it, and we're growing, and we're trying to get more people in. Um, but it's easy. Credit RX 2015. You'll find it in Instagram. 2015 being the year that we opened the company. So Credit RX 2015, you'll find it in Facebook. You'll find it on Instagram. Credit-rx.com is our website. Johanna Diaz, it's my Facebook page. And I mean, honestly, you can find me, you can find Credit RX, and you can just, shoot a little email or shoot a little inbox. Hey, I need help. And then we'll put you through the process. It's a very flawless process. We don't charge anything for our first consultations. We, pull the credit report for you, free copy. We give it to you. We put a plan together. What are the couple things that you need to do? And then obviously we'll talk about pricing and we'll talk about how long it's going to take. But our first consultations are always free. And it gives you an opportunity to at least understand your credit and really know
Mhm.
what is it that I have to do to be able to, get it. And you know what, Amanda? It's so funny. You will think that right now with this whole virus happening and many people are still working and we
Mhm.
are actually seeing more business, like we're busier right now.
Nice.
And the reason why is because people actually learned something from back in 2008. Some of us had
Yes.
some savings, right, for those rainy days, and some other people just didn't have it, right? But people are actually jumping and fixing their credit now because they're expecting that we're going to go back to whatever normal is going to be. But we're gonna go back to like our regular lives. And we have dreams. We can't stop
Mhm.
dreaming,
Yes.
right? We
Yes.
can't. We have to continue to dream about that home that you want to buy or about that property that you want to invest on so that you can create wealth or whatever the case may be. So I know maybe your husband is already being like
He's okay. He's okay.
but we can't stop dreaming. We have to continue to have those big dreams, and we're seeing people calling us like, we had a client that we revived for one of our partners. We've been trying to get him for a year and a half,
Wow.
and we have the intake department takes care of our revivals as well, because we have
Right.
enormous amounts of leads that we haven't been able to convert into from prospects to clients. So we continue to be like, listen, we're still here, we can still help you, and people are actually jumping in the program now
Nice.
that you will think that people are kind of like hiding their money because they're scared. So gotta keep dreaming, gotta keep dreaming.
Yeah, timing is everything. And this is the time that I feel like God has really stopped the world to have us really evaluate where we've been and where he wants us to go and
Mm-hmm.
really get back to one, get back to him, two, get back to our families, our home, our marriages, our children, and then everything else after
Mm-hmm.
that. It's about
Mm-hmm.
if you don't put everything in the right priority, then that's where everything falls apart. So that's where it's been. And so, for anybody who is on, I don't think there was any questions. He didn't pop anything in there. But oh wait, I'm on Facebook Aki. Let me just double check. No, it timed out. But if I don't see nothing from the honey,
And even if later on people,
settle.
if
It's
if
all
uh, if
good.
later on people have questions,
Hmm.
I'm here to help you guys. I have a team. It's not just me. My team is very knowledgeable. We train all the time. We keep up with the updates of everything that has to do with credit to make sure that we can take care of our clients faster and more efficiently. So we're here. We're not going anywhere.
Perfect. Perfect. Well, if anybody does is interested, just go ahead and get in touch with the Credit RX team. Let them know that Amanda Sanchez sent you so that we can know who, if I need to help follow up with anybody, just to make sure that we're being an all around just service to you all. And so I thank you, Johanna, so much for
Hmm.
taking the time out of your day to be here with us to answer all these questions and just talk even a little bit more about life and how we all can aspire to be like you, girl, not
Hmm.
property and travel. My God. Yes. Yes, girl. I'll be just like you when I grow up. So I
You're so
appreciate
funny.
it. But thank you all for tuning in. Thank you for your time and stay tuned. We have an interview coming next week with a CPA and a tax attorney. So if you have any questions,
Nice.
start sending them to me now so we can make sure that we're good, prepped, and ready to go. So that is all for you today for the Women of Influence Finance Edition. I love you all, my beautiful queens. Till next time. Bye.
Bye.